Good morning and welcome to the VSA Morning Miner. It's Friday the 25th of March and I'm joined by Paul Rankin. Andrew is in the States for a week, so we'll be together for the next week or so. Paul, how are you doing?
I'm fine, thank you. Another nice sunny day too.
Yeah, it really is. Yeah, glad to hear that. Right, what shall we start with? Guanajuato Silver. They've updated their gold and silver loan terms with OCIM Precious Metals Group. They'd drawn down an initial $7.5 million July last year to support the restart of El Cubo. And they've now revised, well, they're looking to revise those terms with a new term sheet, which rather than being repayable over 12 months, it'll be repayable over 18 with a 6-month grace period. Some of those proceeds will be used to repay the original loan facility, leaving just 3 months of payments to settle, which are all in gold and silver. So in terms of ounces, that's 57,000 ounces silver and 535 ounces of gold. And we think that G Silver's on track to hit about 1.8 million ounces per annum silver equivalent this year. So that's not a significant outlay once that grace period ends. So very good for cash flow. We'll leave them with net cash of 9.2 million, up 25% once the transaction goes through.
Right, it's all about cash flow management there as they're in this ramp up phase for G Silver for both El Cubo and the El Penguico mine in order to get them working in coordination for best operating margins. And part of this new term sheet for it's a partly a rescheduling of loan payments and that sort of thing. So that's all part of the strategy, I think.
Yep, and all supported by rising silver prices, which are up about 10% year to date. And the technicals looking very good as well. Okay, Paul, what else is out today?
Oh, we had an update on some reserves and resources from Shanghai Mining Club member and ASX listed Mali gold producer Firefinch. And specifically, they had increased reserves and resources on two of their satellite deposits, one of which Viper is already being produced from now. It doesn't seem like it's a lot of ounces, but the key point I think to make is that it does essentially double the ounces from what was expected for these two satellite deposits from when the time they bought the project from Barrick. And it adds overall about 2 years of production ounces to be recovered here as far as the life of mine is concerned. So it's nice incremental improvement for Firefinch. And important to keep in mind, too, is when Barrick essentially sold off this deposit, the gold price was $800 lower per ounce. That means that a lot of the material which didn't have the proper operating margins to keep the mine going for Barrick or make fairly good operating margins now for Firefinch.
Very good. There's an update from Petropavlovsk as well, I think.
Yes, there is, and it's not good news for Petropavlovsk shareholders. They're essentially admitting that with the sanctions on Gazprom Bank, which is one of their major lenders for operations of Gazprom, as well as a major buyer of the gold that Petropavlovsk produces, Petropavlovsk is saying they actually don't have a buyer for any gold that they produce, and it puts them in difficulty as to whether or not they should make things like debt payments against a firm which is otherwise sanctioned by the international community, but listed here in London. So the board is kind of scratching their head and flailing about with different ideas as to who they might be able to sell to going forward in order to both keep the company viable, but at the same time be able to live under the sanctions against Russia.
Yeah, well, I mean, I think these Russian gold producers are completely uninvestable at the moment, given these sanctions, and anyone doing so is pure speculation. I did notice, though, overnight the Russians had said they're willing to accept gold as payments for things like natural gas from unfriendly countries. So I would imagine that the state would be a willing buyer for domestic gold production as well, given the move towards away from foreign currencies.
Yes, that's right. But it's also important for investors or Western investors to realize too that not all uh, global economies or global nations have endorsed the position that the Western countries have, or the Western democracies have taken against Russia. So there are some players out there, both in the private sector as well as a few governments as well, that wouldn't be adverse to dealing with Russian operations like Petropavlovsk and their product, despite those sanctions. If the price is right, I guess is the best way to put it.
Okay, moving on. Full year results, I think, from Victoria Gold looking very strong, Paul.
Yes, they were. Nice fourth quarter and full year result released from Victoria Gold. Last year, they produced 164,000 ounces and realized just shy of $1,800 an ounce on that production for revenues of $284 million. They netted out $88 million of that for net profits. So earnings per share came in at $1.41. Mine production was 2.5 million tons in the fourth quarter and 9.5 million tons for the year. And the cash cost came in at 905 an ounce, and all in sustaining costs were higher still for that, but still pretty decent numbers overall. And for next year, they've calculated they'll do slightly more gold production, is what they're forecasting for this current year. And it all looks very steady state, I think, is the best way to put it here for Victoria Gold at this point.
Okay. Anything else, Paul?
Only to say that I should be with you all of next week. I won't have any breaks, I think, so that'll we'll see you then.
Very good. All right. Have a good weekend, and we'll speak to you next week. Thanks
See you
very much.
then.